Hello and welcome everyone to Oil Asset of the Day for the 12th of May 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So what do you need to know as we go into a new week here? We have seen hedge funds and money managers significantly increase their net long positions in oil. Alongside that, they've also trimmed their sell shorts, which of course is a perfect storm for the upside that we've seen recently with crude oil essentially doubling in price in the latest week. And so far this month, crude oil is up 30%. Over this week, I would pay very close attention to two key zones. So we have $26 per barrel, which is currently providing resistance. And we also have support coming in at $22 per barrel. Right now, for the last 3 or 4 days here, crude oil has remained range bound. I would look out for the potential, of course, if we were to get a break back below the weekly lows here, for oil to start to come under pressure, particularly as we get closer to the expiry of the June contract, which is going to be in 9 days' time. So it's going to be next Friday where the June contract does expire. And you will recall, going back to the May contract expiry, this is where we saw that dramatic drop all the way down to negative minus $40 per barrel, as there were many challenges regarding storage capacity for those taking physical delivery of the contract. So that's definitely something to watch out for as we get towards the end of next week. For this week, I am looking at more range-bound price action. Again, key resistance coming in at $26 per barrel, support coming in at 22. Be mindful that hedge funds and money managers, they do continue to build their overall net long positions in oil. But as we get towards the end of the contract here, we could start to see many traders then shift out to the July contract. As such, the June contract could be under pressure as we go into next week, and we may see a similar scenario where we see a very quick sell-off for crude oil on the June contract. So do pay attention to that. Now, another catalyst that we've seen for more supportive upside for oil in the last 24 hours is the effect of Saudi Arabia looking to cut output. And with that, we have seen oil market take that as a positive. Oil is currently up over 1% on the day, and it's trading back towards the upper end of the recent consolidation. So really, we want to watch out for Tuesday's API data, Wednesday's oil inventories data as well. That will give you a very good sign as to whether we do still have oversupply in the market or whether we are going to see any sort of drawdown from those inventory numbers. So that will be, of course, a catalyst for the next big moves here for oil. But again, no, oil is such a lucrative market at the moment. In the latest week, it's doubled in price over this month so far in May. Just within the first 12 days here, oil is up 30%. These day-to-day opportunities and week-to-week range-bound price action that we are seeing on oil, this provides you with some just really lucrative opportunities. If you're nimble and can be in and out of the markets quickly, oil can deliver a lot of profits fast for you when you trade this market. So again, the key points to really be aware of at the moment are hedge funds and money managers. They've significantly increased their net long positions in the latest week. You want to keep an eye on Tuesday's API data, Wednesday's oil inventories data as well. And bear in mind that the June contract would expire at the end of next week, and that might well provide a great opportunity for a sell short. So just have that on the radar. And as always, if you would like to learn a research-driven approach to the markets, to find out more, very simply go to the link below this report in the description in order to make an application to become a member of the Gold and Silver Club.